Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, May 21st, and the S&P gave us the bounce we were looking for, basically at the 200-day moving average. For now, this is the low in the market, and that's what's important. It's the low till maybe it's not the low anymore. There are a few things that could happen, I suppose. If you just think about it in broad terms, nothing really specific, but either this is going to be the low or right around the low, meaning we're going to see higher prices from here, and then at some point in time we're going to see a higher low, and this low is not breached. There's that possibility. There's a possibility that this range will be the low, but it's going to take, say, a month to work off, or a week, and it's not going to be a one-day event like we have right now. Or this is not going to be the low, and any strength in the markets should be sold into. So that's kind of what we're going with here, and the best answer I have for you is to manage your risk. What we're looking at right here in the market is 1340 or so. That's your target. That is your upside for now in the market. Could it be higher? Yes, of course it could be higher. But given that this is the bottom of a huge high volume area, that's kind of what you're looking for as far as a potential target. So right now, from 1315.50 on the S&P with a low of 1287.25 today, you're looking for the potential for a let's see, about one to one risk reward ratio from top to bottom on the S&P. So you're basically looking for about 25 points on the upside, and your stop has to go below today's current low. Theoretically, if you're looking for a swing trade, that's your risk management approach. So the risk reward isn't heavily in your favor. However, there are a few ways to mitigate that, and one would be focusing on a smaller time frame. So an example would be, okay, I just brought in a intraday chart just to give you a better idea. This is Friday. This is today. Just to give you an idea of how this is a complete rejection. Notice on, let's see, Friday we had a major low around 1294 or so, which was good for, say, a 15-point run to the upside. We got back to that low late Friday afternoon, breached it overnight, into the close on Friday. Last night came down to it, broke below, came back up, and where do we stop this 1294 level? Basically the lows. And what do we get here? A reversal, point of control for the day at the lower end of the range. So the volume this morning, all basically, from Monday in the wee hours of the morning until about 10 o'clock, it was a lot of volume relative to the rest of the day. One thing to note, Friday's high volume area, it's 1304 to 1307, let's call it. What happened when price got there today? We broke above it, came back down, found support at it, and continued higher. So this is the point that I'm getting at. One, you could narrow your focus a little more, and you could have one of your stops, you could have two stops, one below these current lows because it was a major, you're going off a major support resistance level, and it happened to continue to the upside, therefore it's support. So if it comes back below there, then you can probably assume that we're still in some type of range. You can also put your other stop below 1294, which was, two very important swing lows, and we're seeing the second one come to fruition right now. And, you keep your stop there with expectations. This mess down here was just basically noise. Market got too oversold, came back, couldn't get back down to those levels. We had a higher low, and then we were off to the races. So that's where I would keep my second stop. Let me bring in an example that, okay, happened to get long Apple, and it had a huge day today, up nearly 6%, $30. Um, I'd like to say that, I predicted that Apple was going to bounce $30 in one day, but I can't. But I can say that the low around 525 was pretty predictable. One thing that's noteworthy is the low uh, Friday pierced below the value area low. So let me zoom in so you can see a little better. Pierced below the value area low, value area high. And what I mean by that is containing 70% of the volume. So the value area high is 530. What did we do? Thursday, our low was 530.12. And then on Friday, our low was 522. And where did we close? 530, above it. So above the value area 2 days in a row. And what do we get today? A nice reversal to the upside. You can easily define your risk. One, at that 530 level, once we get confirmation that buyers are really starting to come into Apple, and then you can put your other stop below 522 if you feel necessary. So then your question becomes, okay, how do I know, when do I know, like, the coast is clear for Apple for a potential move like this? Well, I'm going to bring in a 2-hour chart to show you this. Where was our low? Where was our last important swing low if you exclude all of this noise? And the answer is simply swing lows in this range between 523 to 516. So basically, in that range, when price gets back to it, you're looking for some type of reversal. And the reason why was because last time price dipped down at this range, what did we see? We saw a move $120 higher. So what are we seeing here in Apple? Come down to these lows. We get a buying tail on 11 o'clock on Friday. The next two bars, down, down. But where do we close? 530. We don't break below these lows. And maybe the reason we don't break below the lows was because the market closed and there was more room to run. What matters is, let me stop. That doesn't matter. What matters is the following bar. What's happening? And then you see buyers. When you see a bar like this on a 2-hour time frame, what's it telling you at an important support resistance level? It's telling you, hey, I want to go higher. You can define your risks to the upside and look for higher prices, and you're getting paid off for doing so. So you just kind of watch and wait, see what it's going to do. If you're looking for an important potential resistance level, you're looking at the 567 level. That's the point of control for the month of May. And you're looking for the sellers to come in to sell. And if you get some type of reversal, similar to what we had here, maybe you just need to see one lower high. When I'm saying lower high, I'm talking about on an individual bar basis. Maybe you just need to see one lower high on Apple, and that's your signal to sell half. But stay in the rest of the trade. Stay in the rest of the trade. I'm not recommending that. What I'm saying is that's what your plan is. The point is, if you buy Apple at these lows, your plan needs to be staying long with an ultimate goal, in my opinion. Your first real target, 567, point of control for May. Your next target, 580. Where was that? That's the bottom of this big high volume area from 580 to 615. Let's call it 615. That's where I would be looking to ultimately take some profits. However, you have to respect 567. So that's just how I view it for now. But that's kind of what you're looking at these levels. Maybe I can pull up the S&Ps for a similar idea. Now you have to remember, we have overnight here. But let's say the 200-day moving average, which is 581. ish, let's say that, that's kind of where you're looking to get long, but realizing that anywhere, say plus or minus 10 points, could be potential support. And the reason why I say plus or minus 10 um, isn't because I just want to be right on this example, saying, okay, well, the market happened to bottom around 590, that's why he's saying plus or minus 10. The reason why I'm saying plus or minus 10 is because if so many traders are looking at it, some may like to start covering their shorts early, just in case, especially when they see the buyers start to come in. So they're going to get more anxious, the shorts, to start covering. On top of that, you get people who don't care as much about 10 points rather than not missing the current price that they have. And that's more for value-oriented guys rather than momentum guys, because momentum guys are waiting for the shift. Swing traders are waiting for some type of, some way to easily define risk. And when we get, on Friday, sure, for this low, it was good for a day trade. It was actually a nice one. Okay, that's fine. But once we got into Friday afternoon making new lows, on Sunday night, the market makes new lows, moves higher, and then on Monday, this morning, of course, what do we get? We get a huge bar. I mean, this bar against, a prior support level that was good for a nice bounce, we're getting support again. It was just rejection for 2 hours, and one of those hours was overnight. So you have to, kind of put this in context. We're close to a low, potential bounce, and now we're looking for it. Now we get a higher low on a 2-hour time frame. Let's look for higher prices. Let's at least define our risk. If you're short, that's definitely when you're looking at the market saying, okay, I need to scale down on this short position, which means I have to buy. And if everyone's buying because of shorts or trying to get long, then you have a pop to the upside. Another thing is 1300. That's just a psychological level, and you're looking for some type of support or resistance at that level in general. So to conclude, the market, you can define your risk to the downside. You can be long this market. You can also look at this, and now that I'm scaled out on a 1 year chart, we're above the point of control for the year too. And if this 13, let's see the number, 1308.59, if that is, hold on, bear with. If price comes down to that and it's some type of support, that's something to be noteworthy of, and you could look for another potential long at that level. But just pointing that out. So really, I think you got to like this market from the long side here. You let it do what it's going to do, but you can't be afraid to be net long this market anymore, only because at the end of the day, the market's going to find buyers who are perceive value in the market, and the market climbs that wall of worry. And there's a lot of worries out there, and you could see, at least for now, some type of bounce, a tradable bounce, whether it lasts 3 months, 1 month, 1 week, 1 day. It's hard to tell, but the important thing is getting involved at major levels. This is one of those levels, and I want you to be on the right side of it. Another thing, either sometime this week, I'm going to, for those interested in learning more about how I technically trade, and when I mean technically, looking for entries, how I see entries setting up, what I'm trading against on multiple time frames. I'm going to open up a trading room for a couple of days to help show that. If you are interested in that, please send an email to this email address. Okay, right here, nick@volumeprofiletrader.com. Send me an email. Let me know you're interested. I need to get an idea of how many people are going to be interested. So I guess I'll see you there. Looking forward to maybe an email. If not, that's okay too. But look at the market, look at your charts, and determine what is at an opportunistic. Are we at a major support level on whatever the underlying is, whether it be. It doesn't really matter. The point is, are we at an important support level, or of course, if you're looking at the banks. Yes, 200-day moving average. Maybe J.P. Morgan's a better example. You know, basically, when's the next opportunity to look for a short? Now I see that it's gotten pummeled, but them discontinuing their stock buyback, it just doesn't bode well for this company, and we could easily see back at these October December lows. So, anyways, take care, have a good night, and I'll talk to you tomorrow.